Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
Right. Man, what a difference a day or two makes. All these guys getting liquidated. Outrageous. Okay, so a lot of people got nuked. Buenos dias. ¿Cómo está? Let's see. How bad is it today? I haven't really looked until, let's see, about 4:30 when I woke up, and then 3 before that, and then about 12:30. Oh, yeah. Oh, it's looking nasty. All right. Hey, man. Opportunities. Am I right? We're going to talk about how much, and you're going to see a lot of wrong excuses for it. Someone was saying, one article, inflation. What? Inflation numbers don't come out till tomorrow. Then another article was like, it's rising interest rates. No one gives a shit about rising interest rates in the crypto market. Get off the gas. Anyway, we will talk about that. Is this the end of the bull run? That's a rhetorical question, obviously. You know that bull runs don't last for 33 days and then stop, right? You just asked that to get me charged. You're just trying to charge me. Are you trying to charge me? Anyway, I like these pullbacks because if you don't think the bull run is over, then you imagine that the next 4 years are probably going to be pretty good, but for at least the next year or two, things look really good. So then you say, oh, well, looks like I've got some discounts on some things. You know what the prices were on these things 3 or 4 days ago. So if you think they'll ever achieve the magnificence of 4 days ago, then these are opportunities. And how do these opportunities get created? Well, let's talk about that. I was going to talk about Russia and their BTC reserve. A lot of people are saying Bitcoin reserves. So we'll talk that first. Then we'll explain how bad those liquidations got, because they got real bad. It was the biggest day of liquidations. Why? Because there's a bunch of YOLO stonk douchebag, like kayaking up S Creek without a paddle dummies in the market. There's a lot more dummies than there were, and dummies are going to dummy, and they're going to gamble, and they're going to risk everything. They're going to take their extra $48 from their shift last night, or the extra $230 they made by Ubering that guy out to Vegas and back, or whatever. This is the dumbest money in the world. And dumb money gambles. Dumb money almost always loses. And this is that. And there's a lot of opportunity. There's a lot of opportunity in these idiots, to the tune of a lot. About 1.6 billion when it was all said and done, although the numbers are probably growing today because you had a lot of people dummy back into their leverage positions this morning when Bitcoin touched 98 and it's melting again. So those people, I would guess, let's see if they're getting beat up, or by how bad. Bitcoin 95.7, that's not terrible. Let's see who's getting beat up. Aptos is down 17%. Jupiter down 19.4%. Jupiter's getting gutted. Optimism's down 14%. Fetch is at $1.59. Whoa! Fetch got its ass kicked. Where would I buy Fetch at? I added some yesterday. I would probably add again below 150. If I could get lower than 150, I'd probably look at adding again. Hard to say. So many things to buy. Anyway. Okay. So let's talk about the liquidations first, because I think that's kind of fun. Bitcoin's drop triggers 1.57 billion in liquidations, and this, by the way, was as of several hours ago. So traders were caught off guard as Bitcoin dipped below 97,000, leading to 1.39 billion in longs getting liquidated, and then just shy of 200 million in shorts getting liquidated. And you say, how did the shorts get liquidated? Because these idiots were shorting it before the drop. And then the price went from, remember, Bitcoin actually touched 100K yesterday. So it bounced up to 100K, liquidated all the shorts, then summarily dropped and liquidated everyone. Total amount of value liquidated from June 1st to December 10th. Oh God, that is the magnanimous amount. But let me show you this little chart here. If I can get it in there. You guys see that? Yay. Let's see if there's any useful information on the bottom. In the past 24 hours, 511,000 traders were I want you to listen to this. This is just in crypto. 511,000 stupid fucking assholes were liquidated. Total liquidations come in at 1.57 billion. The largest single liquidation happened over on Binance, where some dumb asshole got liquidated for 19.69 million. Poof, gone. See you later, bye. Dummies gonna dummy. Hawaii, you nailed it. You just won the internet. It is mind-boggling. It's mind-boggling. Over and over. No one, people's desire to gamble is impossible to satiate, I guess. Anyway, Bitcoin's drop below 97 led to 1.39 billion in longs being liquidated, 183.63 million in shorts. Such high dominance of longs to shorts shows overconfidence among traders expecting Bitcoin's price to rise past 100,000 in the coming days. Well, that didn't work out, did it? No, it did not. The liquidation heat map on CoinGlass reveals concentrated liquidations around the 97,700 mark, which indicates that most of the heaviest leverage positions were mainly clustered right there. The cumulative long liquidation curve also steepens dramatically at this level, showing that 97.7 was a critical support level for leverage longs. Once breached, it caused cascading liquidations. We know how that works, further amplifying the downward price movement that pushed Bitcoin below 97,000. Shorts were relatively minor comparatively, with their curve remaining flat, showing a lack of aggressive shorting, positioning at higher prices. It's funny because this is obviously outrageous, ridiculous gambling by the YOLO crowd, but with leverage that they shouldn't have. That's why Binance, when you see Binance, Bybit, and all that, they extend ridiculous leverage. Used to be that Binance would give you 120x leverage. So of course, what do people do? They take their $46 from last night or their $230 from running that philanderer up to Vegas and back. They park their Uber and they punt it. And then they do the same shit tomorrow and the same shit tomorrow. And they do it indefinitely because people that gamble, if they've ever won in gambling, that's the only thing they remember. They remember the win, and that somehow perverts their thinking for its primacy. I guess primacy versus recency. If you win out of the gate, you just think, oh, winning's easy, gambling's easy, and it's forever. And it's an addiction. I used to think Michael Saylor was a gambler. Michael Saylor runs a Ponzi scheme, which we're going to get into. I saw a couple different articles about convertible notes because other people are finally starting to suss that Michael Saylor's, a complete piece of shit. And finally, it's starting to resonate. But funny enough, it's resonating at the same time that the rest of the world is considering going to these Bitcoin reserves, which I mean, good. If you own Bitcoin, this could be awesome. But so anyway, we'll talk about that here in a second. Anyway, let me finish this up. Let's see. The 12-hour liquidation data shows a substantial 91 million in short liquidations, which occurred earlier during Bitcoin's price rise before the dip. So it rose, the shorts, they had to cover, so they got knocked out. And then amazingly, at 100, when people started really going long, the price went down. It's crazy. It's almost like it's engineered. Certainly that's not the case, but it's almost like it's engineered. Like eerily similar to an engineered wipeout. This is just these big facilities and firms and funds like that just taking money from poor people that shouldn't be in the crypto space, to be fair, but poor people that have access because it's easy to get access. This happens the same thing in the stock market because of Robinhood and shit like that. Democratizing investing. Yeah, there's a reason why it should be hard to invest. Because investing is mostly a one-way ticket. People giving their money to veterans. Period, full stop. That's why there's a 1% and a 1% of the 1% and then everybody else. This is not accidental. Anyway, on the other side of that, Russian lawmakers propose, here, let's put that one up. That's a cool one. A strategic Bitcoin reserve. That's right. That seems to be the cool thing to propose lately. So apparently there's like 11 states in the United States. I guess this guy, is it Dennis Porter or something like that? I guess he's going to do a press conference or a presser or reveal all these states and, Pennsylvania and Florida and yada, yada. So that's kind of cool. Whether it happens at the U.S. level, I don't know. I don't know why they wouldn't, but it wouldn't be the way Saylor says, sell your gold and buy Bitcoin. That's stupid. But he's running a Ponzi scheme and he needs a lot of money to come in, so he needs this Ponzi to keep going. Russian lawmakers propose a strategic Bitcoin reserve to counter geopolitical challenges as Bitcoin gains traction globally. The Russians plan to use digital currency as a hedge against geopolitical financial barriers. A member of the Russia State Duma has proposed the creation of a national Bitcoin reserve, positioning the crypto as the tool to counter economic sanctions and ensure financial stability. The proposal, introduced by Antoine Tchev of the Novye Lyudi Party, reflects a growing interest in leveraging digital assets amid restricted access to global financial systems. This was all kind of in response, obviously, to the invasion of Ukraine and all that. So it comes days after Vladimir Putin, we talked about this Friday, I think, had made positive comments about Bitcoin during a conference, calling it an unstoppable technology. Anybody that's that's going against Bitcoin right now, minus the little daily whatevers, if you're actively going against Bitcoin or talking against Bitcoin, like Peter Schiff and all these guys, like you're just forever going to be on the wrong side of history. Like really just forever going to be on the wrong side of history. I wish, who cares? Let's see. Question, why do the alts get killed when idiots who gamble on, because they're not just gambling on Bitcoin. Bitcoin is the big one, but those, there was a lot of money lost on XRP, Cardano, Solana, like just go down the list. People are gambling on everything. It's just that most of the gambling and also the legalized gambling is Bitcoin and Ethereum, meaning like the ETFs, you can go that way, or you can go to the futures markets. So, yeah. In a formal appeal to Finance Minister Anton Siluanov, I wish they would just write it in Russian. Anyway, Tchev suggested that a Bitcoin reserve akin to a traditional foreign currency reserve. And so that makes sense, right? You want that's what you should have. Bitcoin should be held as one of many assets, not the only one. He argued that cryptocurrencies offer a unique advantage in mitigating risks associated with sanctions, inflation, and currency volatility. Probably right. With limited access to international payment systems, cryptocurrencies represent one of the few viable options for global trade under current conditions. Yes and yes. Bitcoin as an asset for the Russians. Tchev pointed out that to Bitcoin's rising valuation, noting its December 2024 price of $100,000 as evidence of its reliability as both a store of value and an investment. While Bitcoin is currently trading around the 97,000 level, it has demonstrated significant resilience and potential for growth, peaking above 103,000 earlier in the month. That was a few days ago. The proposal aligns with the Central Bank of Russia's broader initiative to integrate digital assets into international payment systems. Tchev emphasized the importance of developing modern solutions to manage economic challenges, highlighting Bitcoin's decentralized nature as a safeguard against external financial pressures. Man, what a difference a few months makes. The Russians, Donald Trump, a bunch of states, pro-Bitcoin. Not just pro-crypto, but pro-Bitcoin specifically. In this idea of using it to bolster reserves, treasury reserves. So when do you think regular banks start doing this? If you have a bunch of pension and hedge funds doing it, and you have governments start doing it, even central banks perhaps, when do you think regular banks, provincial banks, these kind of second and third tier banks, when do you think they start doing it? Soon. I think soon. The federal U.S. government, as well as multiple states, have initiated legislation to create strategic Bitcoin reserves. However, the plans are still in the early stages. We haven't seen the first one of these start yet. Hold on. Let me authorize my chicken replacement. I ordered chicken for the cats. Boneless, skinless. Yes. Air chilled. Okay, approved. Boneless. Signature Farms boneless, skinless chicken thighs. Okay. Let's do it. Done. We done did it. All right. Obviously, there's going to have to be a lot of reform and policy change in order for these different countries. They'd have to collaborate with their central banks and figure out the way this would be implemented. But it does put Russia in an interesting position because you can't discount Russia. So you have to imagine that this is something that the BRICS are probably looking at. Anyway, some analysts had said that they thought this highlights the shifting role of digital assets in global finance as governments increasingly recognize both Bitcoin and the greater cryptocurrency space as an alternative to traditional reserve mechanisms. But there are some regulatory and logistical hurdles that remain. So, yeah, of course. But pretty interesting. Pretty interesting indeed. All right. Okay. Let's go over to markets. Let's go over to markets before I get into explaining the Ponzi scheme. and how this Ponzi scheme works. That's what we're going to do. Our brain games today are going to be, we're going to discuss convertible notes in the total fucking quagmire Ponzi scheme that good old Michael Saylor, what do we call it? MicroStrategy, that MicroStrategy is running. Off we go. Off we go. All right, let's take a quick look at these markets that are getting their asses handed to them still. And I like this because you in a bull run, typically you don't know where you can buy. I was talking to Brandon yesterday, and this was in the early stages of the sell-off. Bitcoin was still around 97 and a half, 98. And I was like, the problem is nothing's cheap enough to buy, and I don't want to sell anything. So I'm vexed. I'm in a position of vexedness. I am vexed, Governor. So what do we got? Let's see, down 2%. It's not bad. Again, your 7-day, you're only down on the week, less than 1%. Could still be up on the week, and all these other assets just getting crushed because now people are gun shy. Why? Because the same dummies that compulsively gamble, they don't know when or what to buy because there's no value system for the assets they're buying. They're buying stuff that they either read about on social media, getting their marching orders from TikTok or FinTwit, or just their asshole friends at the bar or in Ubers. I know it sounds bad. It sounds like I'm talking down on a class of people. I am talking down on a class of people, a bunch of fucking idiots. The problem is there's a lot of those idiots. The good thing is there's a lot of those idiots. And that gives us that presents opportunities for those of us that aren't complete fucking morons. So I didn't really have a rant today, so I'm throwing in some F-bombs to make this seem ranty. Get some ranty. Sticking with Bitcoin till 250. I think I'm sticking with Bitcoin forever. I will endeavor to borrow my way out of Bitcoin. I don't know that I would ever directly sell my way out of Bitcoin, but I will say that it looks like I was gonna buy a place last year, and I took the money that I was gonna give these guys about this time last year. No, it was a little earlier. It was in November, and I sold. I sold USD into Bitcoin. I sold USD for Bitcoin, and then I flipped it back the next day after the election, and I had a pure double in it. So that ended up being a significant addition to my fund for my house, which was mostly paid for by Cardano. So that's good. Anyway, as we look, who's gotten beat up the worst? Well, thankfully, people don't keep drinking the stupid ass Kool-Aid for XRP. You'll notice it's getting destroyed. Why? Sentiment trade, dummies. Sentiment trade, dummies. Sentiment trade, dummies. Now, some of these got destroyed for other reasons. Remember, as you go further and further down the curve, going out on the risk curve, essentially, is from Bitcoin, you also see less liquid assets. Look at their market caps. The lower these market caps, the more irregular. The fact that this thing could shit the bed by 19%, XRP, by 19% means it was a bunch of leveraged morons, right? That is, and also Brad Garlinghouse didn't do them any favors by shitting the bed on 60 Minutes. Anyway, whatever. Good job, Brad. Well done. You look like a fucking idiot. Doge got beat up a little bit, but it should never look. This thing should be fractions of pennies. It shouldn't be 38 cents anyway. So people should be happy for whatever they got. But people got sucked up into this. People got sucked up into Cardano, into the Charles is, I'm going to be part of the president's fucking scumbag liar. The dude, he lied by omission, and a bunch of people bought into it, and the token shit the bed, as it should. Are those two things completely correlated? No. This was a sentiment buy. All the sentiment tokens got wrecked yesterday. Now, I will say this. I was surprised how well SUI stood up. For a while, it was like not down at all. It was at $4. It did pretty good. It battled. It's gotten beat up today a little bit because we're having a second day of sell-offs, and I think that surprised a lot of people that weren't prepared to get whacked twice. Well, you get what you get. So that's interesting. Aptos took a big punish, like a big hammering, but these are new. Aptos and SUI are kind of in that new basket of assets. There's no sentiment there. Where there is the kind of the spammy, the BC, the Rao Pal, all the douchebags that are pumping those tokens. Remember, those are both on the Move blockchain. With its DNA going back to the failed. I don't know about failed. The project. The stablecoin project over at Facebook that never got off the ground because regulators like Elizabeth Warren were, choking them and basically in corrupt ways influencing what a private company, what a company can and can't do. Whatever. It's. I hope one of these days Elizabeth Warren gets called on the carpet or sued personally for some of the bullshit she's been a part of. Like collapsing banks, calling banks personally and threatening them, calling banks that support other banks and threatening them if they don't kill relationships with banks that service crypto. Like, Elizabeth Warren is not just a piece of shit, she's corrupt. In the same way that Nancy Pelosi is not just a piece of shit, she's corrupt. In the same way that Brad Sherman, right here in LA, Brad Sherman is not just a piece of shit, he's corrupt. These guys take money from banks, from legacy banks. If you take money from banks and then you go after crypto, you're fucking corrupt. Period. Anyway, there, that's like a little half rant. Okay. What else got whooped? VeChain down a little, Fetch down quite a bit. Let's see. Filecoin punished. Filecoin was one of the biggest losers yesterday, but it's way up over the last few weeks. Everything's up since the election. Algorand got gutted. I mean, freaking gutted. This thing was at 60 cents. It was over 60 cents just a few days ago. So why is Algorand? Sentiment trade. Nothing there. Zero use utility or adoption or value. These sentiment trades, they come and they go as fast as they can. So, and for those of you that haven't been in a bull market, this is how a bull market works. You go 3 steps forward, and sometimes you go 2 steps back, and then another 2 steps back, and then 17 steps forward, and 18 steps back, 3 steps forward, 2 steps back. This is how it works. It's very volatile and slimy, and the further you get down, the more volatile these assets are. Cosmos was over $10. It is not. Again, sentiment trade. Optimism got up to about 270 something, 272, 27, maybe a little bit over. It's funny, I had a sell order in for my trading shares. It didn't go. I was a little bit too high. It didn't catch. Anyway, I bought back in yesterday. I added some optimism. Yay, because I like this asset, and on dips, I'm going to add it. Graph token, it got beat up, but it doesn't look like as big of a beat up. Percentage is percentage, but again, you go further out, you go to these lower market cap assets, they're much sloppier. Jupiter is at $1. I have some thoughts on Jupiter. Let's see. Where did I have? I think I even had an order in on it. Let's see where that sucker is. Oh, yeah, I do have an order out there floating, waiting. So I have an order waiting on Jupiter. I have one that just went on this other one. All right. Anyway, I will share that with the digital private clients. I'll give you all that data after the show. All right. Anyway, as you go down the list, Flow shouldn't even exist. There's nothing there. Dapper Labs, give me a break. A blockchain for NFT. That doesn't mean anything. Every blockchain, every distributed ledger has NFT capabilities now. You can even have NFTs floating around Bitcoin. Like, stop. That's a waster. This one got waxed pretty good. Storage got whacked pretty good. NewNet. Oh, surprise, surprise. NoNet. The company with no project ever. They got beat up. Of course they got beat up. Why would it be down 30% when it should be down 99.99%? These are garbage assets, man. Just garbage. Hypercycle holding up pretty well. Oh, there you go. Okay, so there's kind of the rundown on that. There's the monkey math on Bitcoin. Let's see. Ouch. Bam. Kicking the dick. Look at that. Boosh. That's not very long. Look how long that is. 710 to 8. So in 50 minutes, we dropped $2,500. And I only wonder if I was to look at, I wonder how many liquidations happened today. People are like, okay, now we're back. These things take several days. It's the longs being liquidated and it's the shorts covering, it's the reverse. Everybody gets punished. So when the longs start getting liquidated, first it's the 100x, the 50x, the 75x, then it goes to the people that got margin. It's the 4x's and that whole crew, and then the 2x crew. And sometimes when Bitcoin starts getting liquidated, people are selling other stuff to cover their losses. Then a full-on shitting in your pants panic occurs, like we saw yesterday and a little bit today, but mostly yesterday. And everything sells. Everything must go, which is good because then it cleans the slate. It removes that 533,000 people. They're gone. Their money's gone. They have this now. They had something yesterday. Now they have this. They have big fat goose egg. So I would expect this to last for a day or two more. So there's going to be, don't get too hasty just yet. There's going to be deals to be had. Definitely deals to be had. All right. But I don't think anything fundamentally has changed. Okay, I wasn't holding any save, but this morning I picked up. Well, you can't call the bottom. If you think it's going to be like that, then what you do is you split your purchase up into a few purchases, just because you never know. And don't worry, these markets will climb back again in the not too long future. You'll see. Okay, let's switch gears. Let us talk Ponzi schemes. Ooh, we need intrigue music for Ponzi schemes. We're going to talk about convertible notes, and then we're going to talk about how this particular set of convertible notes that Michael Saylor sells is pretty much a straight up. It's a Ponzi scheme disguised as a volatility trade, disguised as a functioning company trade. Yes, it's a lot of things. It's a lot of weird things.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay. This I always thought this was funny because Tether prints money out of thin air. They really just make it and it pumps the price. MicroStrategy prints money out of thin air and it pumps the price. So, but a lot of people are like, well, okay, but how does the MicroStrategy scam work? You know what? I think that deserves a banner. How does the MicroStrategy scam convertible notes work? Bam. Okay. First we need to talk convertible senior notes so that you understand those. Then I'll explain in a little bit more detail the reasoning why people might be getting these things and why it pretty much any way you look at it, it's like a pure Ponzi scheme. And at some point, people are going to wake up and go, wait. What happens when Michael can't keep doing this? Because this is one of those ones where you can't keep doing it. Anyway, companies use a bunch of methods to raise money. They issue stock, they issue preferred stock, they issue different types of debt. Convertible senior notes is one of them. So we're going to dig into a little bit, what are convertible senior notes and how does MicroStrategy use them to get more Bitcoin? And then on the other side of it, why traders are participating in this. And as you step back, it looks a lot like a Ponzi scheme. So first, what are convertible senior notes? People, you guys understand what convertible notes are, but simply put, a convertible senior note is a loan obtained from investors. That's it. It's senior, so it's going to be above other debts. So if the company went bankrupt, they'd be first in line at liquidation. First in line at liquidation, but they're not going to receive a dividend. That's the opposite of owning equity. Equity is last in line at liquidation, first in line for dividend. So equity is the bottom of the capital stack when it comes to repayment. Well, there is no repayment. If you own equity, there's no repayment in the case of some rapid unwind of the asset or basically just bankruptcy, right? But senior note holders, they do get paid back. So this kind of note, a senior convertible note, can be converted into shares of the company issuing it. Does it make sense? Convertible. It's convertible into shares. The word senior means that if the issuing firm is declared bankrupt, the holders of the convertible senior note are prioritized in their payment. They're at the top of the capital stack, right? And things you're going to hear when talking about convertible notes: the principal amount, the maturity date, the interest rate, and the conversion price, right? So the principal amount is the initial loan obtained by the company from the investors, okay? How much money do you give Michael? The maturity date is when Michael starts to repay the principal amount, okay? That's the maturity date of the note. The interest rate, it can be a variable or a fixed rate of interest paid on the borrowed amount. The way Michael engineers this garbage is there is no interest rate paid. You're giving him money for free. He's like, wait a minute, that doesn't make any sense. Why would someone do that? We've asked this. Bitcoin yield? Nope, that's a bullshit made up term. Now, the next thing I think we need to know after the interest rate, since these things have a zero interest rate, is the conversion price. And so this is the price at which each convertible senior note can be exchanged for a company's shares. Okay, that's where this is the bit of the sausage that people are having a hard time wrapping their mind around. So how companies issue convertible notes for crypto investments. So it's not just MicroStrategy, a bunch of companies, especially these mining companies, have adopted Bitcoin as their reserve asset. And so they're now using convertible notes to finance Bitcoin purchases. Basically, everyone else's money to buy Bitcoin. And you would think, why don't these people in these funds why don't they just go straight to the ETFs? They're not stupid, right? So certain private investors are stupid, but if you're raising money through convertible notes, so the people buying the stock are fucking idiots, like idiots. If they understood this, the people buying stock in MicroStrategy are idiots. I mean, the dumbest of the dumb, because they don't understand how math works. They are the suckers. They're the dummies. But the people buying the notes are essentially doing a kind of volatility farming. So anyway, so here's how it works. Basically, step one, a company issues a convertible note. A firm wishing to buy Bitcoin will announce its intention to use the notes, and it says, hey, investors, who wants in? Step two, the investors purchase the issued notes. Interested investors buy the convertible notes, thus giving money to the firm for a fixed amount of time. Third step, the company purchases Bitcoin. So after receiving money from the investors, the company buys Bitcoin from a crypto platform, usually an OTC, that serves institutional clients like Coinbase, like the back end of Coinbase, Coinbase Prime, or one of those kind of things. If Bitcoin's price rises, the shares of the company issuing the notes will likely increase in value. Why? Because, hey, Bitcoin's going up. Therefore, my shares, not the note, my shares should go up in value. That means that the investors who convert their notes into those shares could see some gains, right? Because they have a point of convertibility, that price. It's noteworthy because since a convertible note is a debt instrument, it comes with some downside protection. And what that means is that investors will not lose their principal investment if the company files for bankruptcy, because it's basically pegged to the liquidation number. So if the company was worth a certain amount, they would make sure that these senior note holders, they don't sell more notes than the value of the company at liquidation so that these guys can get repatriated. So it's kind of like there's no downside risk. There's only upside. Not if you own shares. If you own shares, you can get wrecked. But if in this particular way, it's kind of a way to buy Bitcoin with no downside risk, or at least for the near term, no downside risk. Obviously, this whole thing can unwind quite dramatically. MicroStrategy, the way they use this is, which is a little different than what I've just talked about, but it's the same basic idea. They have their convertible note issuance. Okay, so they issue convertible notes, convertible senior notes in a bunch of rounds. They raise a bunch of money. The issued notes do not attract periodic interest as they have a zero coupon structure. He pays you nothing. You give him a free loan for the right to buy his stock at some double crazy amount, but you have downside protection. So the Sailor has raised more than $10 billion, doing $10 billion with convertible notes since 2020. The latest round they did was of issuing notes was December 3rd. So, last week. And they raised $2.1 billion. The second part is obviously they use that to go buy Bitcoin. So MicroStrategy, they're over 423,000 Bitcoin at this point, obtained through the issuance of convertible notes. The firm's Bitcoin holdings represent about 1.9% of the total Bitcoin supply. It's a lot. MicroStrategy's Bitcoin investment has helped the company achieve some pretty good returns. So their stock value has increased in the past 4 years a 20x, which is good. That shows you how stupid investors are. That shows you how stupid, because Bitcoin is not up. Well, depends. If you take the lows of 2020, but anyway, MicroStrategy is up more than Bitcoin is up. So, which that means it worked out for those convertible note holders. That makes sense? So, and by the way, MicroStrategy over the last 4 years has outperformed all of the leading stocks in the United States, including NVIDIA. Did you know that? Did you know that, my friends? Isn't that crazy? All on this quasi Ponzi scheme. So, the advantage of convertible senior notes. Lower issuance costs, right? So because issuing notes involves lower costs than like traditional equity issuance, going through all that. Convenient capital acquisition. Convertible notes allow companies to raise money directly from investors to finance various causes, thus saving the costs associated with borrowing loans from traditional banks, right? And then investor appeal. Investors who want exposure to Bitcoin without holding the coin themselves, and they want some downside protection, they find convertible notes issued by companies like MicroStrategy attractive. And also, they probably get caught up in the excitement. What are the disadvantages? Well, Bitcoin has extreme price volatility. Therefore, because Bitcoin is highly volatile, a company holding it can suffer pretty big financial losses if the coin goes backwards. And there have been many times where Bitcoin has had a 50% retrace, only to go on to make new highs, obviously, but a 50% retrace is not out of the cards. Regulatory uncertainty. Obviously, the rules in crypto are it's that climate looks a lot better. So I don't think that's as much of a risk as it might have been in the past. Okay, so now show of hands. Do we all understand how convertible notes work? Ponzi sounds like a kid's game. I know, right? Hey, let's play Ponzi, everyone. Are we all here? Yes, but there's more to it. Now we're going to really dig in. So that's the part you can read if you just look up what's a convertible note. I just want to make sure everybody understands convertible notes before I discuss how much of a fucking scam this is, because we haven't gotten to the good parts yet. Okay, let me just bring up my show notes. As long as we all understand what a convertible note is, now I'm going to take you through, like the 12 days of Christmas. Let's do the 8 days. We'll the 8 steps of Ponzi. 8 steps of Ponzi. So, what is the, if you walk into a room and you see an idiot, you point to him like, look at that idiot. There's an idiot. If everybody in the room is the idiot, you're the idiot, right? It's kind of like if you can't spot the sucker at the table when you're playing poker, then you are the sucker. What was that? That was in Rounders, the Matt Damon one where they're all gambling and shit. Anyway, you want to understand what kind of game is being played, especially from a game theory perspective. In MicroStrategy's case, their game is completely tied to Bitcoin. They are no longer a business intelligence. They're not even in. There's no intelligence going on at MicroStrategy. This is a company that has tied itself to Bitcoin, and if Bitcoin goes down, they all drown, and if Bitcoin goes up, they're fine. It's kind of like driving uphill with a car with no brakes. You're fine until you get to the top of the hill, and when it goes the other way, everyone dies, including grandma. So, let's break down the Ponzi. Michael Saylor's story is pretty simple. He goes everywhere. He has kind of a cringy voice. He's kind of cringy. He's kind of uncomfortable. I definitely wouldn't let anybody that's under the age of like 18 hang out with him for too long. I'm just saying. Anyway, so MicroStrategy, he'll tell you, is a way for investors to own Bitcoin indirectly. Not that you need to, but if you want to. The company borrows money by selling convertible bonds and convertible senior notes and uses that money to buy Bitcoin. All right, everything sounds simple, right? Well, let's dig into how it actually works and see how fucking messy it actually is. Convertible bonds, we talked about, and volatility. Bonds are the loans that bondholders can later convert into company stock, should they choose. Volatility. This is how much a stock's price jumps up and down. High volatility, high swings. Low volatility, low swings. So let's kind of look at all the moving parts in this system. How do convertible bonds work in this scheme? I have to say scheme now because this is no longer an investment theory, strategy. This is a scheme now, a scheme bordering on corrupt. Anyway, MicroStrategy raises money by selling convertible bonds and senior notes. Hedge funds, like some of the ones that were Millennium Management, Calamos Partners, stuff like that, they buy the bonds from Michael Strategies, from MicroSaylor. They buy these bonds because they can profit from the stock's volatility. So these funds really aren't interested in owning Bitcoin. They really don't give a shit about Bitcoin. They want to make money from the movement of MicroStrategy stock. And who's moving MicroStrategy stock? All of the retail Joe six-pack fucking rubes that are sold Michael's bullshit dream. So the company sells bonds at a low cost to attract dummy retail buyers, right? Okay, indirectly. He sells the bonds at a low cost to get investors, the investors like the hedge funds and stuff. They pile money in so he can go buy Bitcoin, which buys up the price of Bitcoin. He hopes he can affect it. And again, the further this goes, the less effect each dollar has, because as Bitcoin's market cap gets bigger, every dollar goes less far. Every dollar does less. So the buyers of these bonds, specifically of the bonds, they're playing a volatility game. They make money if the stock price swings way up or way down. And you say, okay, so who are the suckers? The suckers are Joe Sixpack. The suckers are the retail investors. So if you own MicroStrategy stock, you might think you're getting rich because the company owns Bitcoin and Bitcoin's going up in value. Here's the reality. Your money is being used to create volatility, which benefits the bondholders. Right? This volatility makes MicroStrategy's convertible bonds valuable, not the Bitcoin itself. Right? So, and don't just think that people buy these bonds and then don't retrade them. Remember, this is an asset. It's not like a treasury or something like that. It's not a AAA pristine quality asset. This would probably be rated junk. This is definitely rated junk. It's not even in the B's. It's like, well, it might be double B or single B. This is junk debt. So as a shareholder, you're not profiting from Bitcoin as much as if you just owned Bitcoin outright, right? But you're creating the conditions by buying up the stock that allow the bondholders to profit. They are the ones that are winning, not you. They have downside protection, and the sky is the limit for them, and the volatility is the trade. So it's described as kind of like an upside down pyramid. So like take a pyramid and then flip it upside down, which is not stable because the base is wide. But MicroStrategy is building a financial upside down pyramid. You might say, oh, pyramids are usually compared with Ponzi schemes. Yeah. Yep. So the bottom, which is the narrowest part, is the company's actual assets. Bitcoin, a little bit Bitcoin, right? The top, the widest part, is the growing pile of debt and stock being issued to buy more Bitcoin. Bunch of debt, bunch of promises, little bit of Bitcoin. Debt, Bitcoin. Obligations, assets. So to keep the system stable, the company must continue issuing bigger and bigger bond sales to raise more money. Each new round of bonds increase the company's debt, making the pyramid shakier. This is why, if you listen to him, he's like, we're going to raise $2 billion. Okay, cool. And 800 million is going to go to pay for new Bitcoin. Oh, wait. Oh, what was that? What was that? Because he's got to go take the new money and pay out the original lenders, the original investors, the other older bonds. Wait a minute. If you're taking new money from people and paying out old investors, isn't that the definition of a Ponzi scheme? Oh, shit. It's so something literally in the shape of a pyramid is also a Ponzi scheme. It's like, it gets better and better. Anyway, each new round of bonds that are issued or equity that is issued increases the company's debt, but mostly bonds, just through like this strategy, these senior notes. Each new issuance of bond increases the company's debt, and it makes the pyramid more shaky. It makes the top bigger, right? So this cannot last forever. Because math, right? So why is this kind of strategy unsustainable? Well, volatility is what drives this system. But what happens as more and more money pours into crypto, more and more money, more and more money, more and more money? Volatility starts to decrease, right? When we looked at earlier, we looked at all the assets. The lower we got in market cap, the higher the volatility was. Notice that? Why? Because each dollar does more damage one way or the other. With Bitcoin, a dollar makes no difference. You go buy a dollar's worth of Bitcoin, it makes no difference. You go buy a dollar's worth of NewNet, it goes up $8, right? So a dollar doesn't go as far with higher market caps. So hedge funds, They're only buying these bonds because the stock is volatile. These big swings disproportionate to the price of Bitcoin. If the stock stops jumping up and down, bondholders are not going to participate, right? So there is a point where the volatility starts to decrease. Why? Well, because if all you buy is Bitcoin, and Bitcoin takes in tons of money, and Bitcoin goes to $1 million a coin, and the Bitcoin market cap is $10 trillion, it's not going to be as volatile, which means these funds giving, loaning money to MicroStrategy no longer find this attractive. Guess what still remains, though? All of the freaking debt that they have accumulated. So the debt becomes unmanageable. MicroStrategy has to pay these back. If Bitcoin prices drop or the volatility, either one, Bitcoin prices can stay consistent, but the volatility disappears, you still have to pay back the bondholders. What's your asset? Oh, yeah, Bitcoin. That's all they got. There is no company. None. There's no company there. No one fucking does anything at MicroStrategy. Oh, business intelligence. Bullshit. They do nothing. So if the Bitcoin price drops or the volatility in the market disappears because the price doesn't drop, but because more money comes into Bitcoin, which is his goal. So not only does he have to outpace the price of Bitcoin going up, he has to outpace and manufacture volatility because that's what he's selling. It's a volatility sale. So when either of those two things stop, even if Bitcoin just slowly climbs to 10 million a coin, it wouldn't matter because they will have to start selling Bitcoin to repay their debt. Yeah. So guess who gets their money no matter what? The convertible senior note holders, the bond holders. They get their money. Why? Top of the capital stack. Who gets left with nothing? Shareholders. Why? Bottom of the capital stack. Remember, senior debt, first in line at liquidation. Equity, last in line at liquidation, first in line for dividends. You think they're waiting on dividends? People that are buying, come on, bro. So there's a mathematic reality, a certainty. The strategy that MicroStrategy is employing requires an endless supply of new investors willing to buy either shares or bonds at incredibly inflated prices. Endless, I'm going to say that again, for the math to work, this requires an endless, no end, supply of new dummies, institutional investors and retail Joe Six-Packs willing to buy their garbage-ass shares or bonds at inflated prices. On the other side of it, maybe there's no limit to how much MicroStrategy can raise. Maybe they can make all the money in the world, but I think maybe there is a limit because the same funds that are buying this for volatility's sake, they're looking and saying, okay, when does this not make sense? There's going to be a line in the sand where they say volatility's not there anymore, or Bitcoin's not moving as fast as it was. Why? Well, because percentage-wise, it's not moving as fast because the market cap is a lot larger. So inputs, the same kinds of cash inputs, don't do the same exciting things to the price of Bitcoin. Michael Saylor's $2 billion doesn't do now what it did 6 months ago when the price was, 56,000, obviously. So when that limit is crossed, where MicroStrategy can no longer raise money because either volatility has decreased or the price of Bitcoin's climb, the speed of that climb has decreased, this whole fucking thing collapses. All of it. House of cards. So what would happen if it falls apart? Well, if an upside down pyramid falls, crashes, hedge funds will demand their money back. MicroStrategy will have to sell Bitcoin to pay back that debt or literally just give them. But what's going to happen? But if they go into a liquidation situation, they won't even have control over it. It won't even be MicroStrategy doing the liquidating. It will be someone that's handling the bankruptcy or whatever weird vehicle this becomes. So that means MicroStrategy has to front run their own bankruptcy and start selling in order to pay back the hedge funds. What do you think is going to happen to the stock price when they go, MicroStrategy is in trouble? They're about to start selling Bitcoin because they gotta pay back all their senior note holders. Oh shit, stock's going to crash. So it will probably fall to at or about the total net asset value, the total net, or lower because of the costs associated with a bankruptcy or an insolvency. So then, who gets left holding something worth nothing? Shareholders. They are left with nothing because the bondholders, they get the first claim on the Bitcoin. They actually get Bitcoin. They have downside risk. The shareholders have nothing. Their risk is infinite. Well, their risk is 100%. They're being sold this bullshit story about how they're getting Bitcoin yield. There is no Bitcoin yield. That is a bullshit term that MicroStrategy made up. I like that, MicroStrategy. It is not real. It is fucking fake. He is a fucking career liar. And he has just pipered all of these idiots. And so the reality, I don't know if anybody here owns MicroStrategy. It has done good. The price, and also he can get away with that he can still do this for years. We probably won't hit some kind of weird moment unless people wise up. People don't wise up. People are mostly stupid. He could do this for another 5 years, probably. But if you own MicroStrategy stock, you're not just an investor in the stock. You are the dummy in the room. You're the sucker. You're the idiot because they are counting on you to propel this thing so that they can get good. It should be obvious to you that Michael Saylor sells stock as fast as he unlocks it. That should be a clue that something's not right. So by paying way above the net asset value for shares, you make the stock volatile. And that volatility is what the hedge funds want. And it's what MicroStrategy wants to keep selling cheap, zero coupon bonds. So in essence, shareholders are MicroStrategy's real product. The company uses the shareholders to keep the volatility alive that keeps this an attractive trade for institutional investors. They don't give a shit about the retail investor other than telling this bullshit story so that this is slightly more educated dummies, dummy into it. Why the fuck would anybody want to buy MicroStrategy shares if you understand how this works when you can just buy the Bitcoin ETF? Well, because MicroStrategy, the stock, because he has perversely convinced a bunch of idiots of this story of his, it trades at about a 3x to Bitcoin as far as like the actual price action. So people are still getting good. And again, it was the best performing asset over the last 4 years. Better than NVIDIA. Did a 20x. But it did a 20x on bullshit. You know, Bernie Madoff's fake fund did real good for a while too. Anyway, you got to ask yourself, like, what is the real game going on? This is not about Bitcoin at all. It has nothing to do with Bitcoin. This is a volatility play, and it is an unsustainable strategy, right? Because it is a system that relies on an ever-growing amount of debt or new idiots. Either new idiots to buy the stock or new institutional money to come in and invest. Either way, the debt continues to grow, which that can't last forever. And the incentives are misaligned. So, just know where you're at. Just know where you are in like the stack, right? You are at the bottom. So if you're a MicroStrategy shareholder, remember, you are the engine of this whole bullshit system. And when, not if, but when this pyramid collapses, bondholders will take their money first. There'll be a nasty liquidation. Oh, by the way, He owns 1.9, almost 2%. He doesn't. The company does. 2% of all the Bitcoin. What do you think happens when they start selling? Well, probably BlackRock comes and buys them. They probably have some wink, wink, nod, nod agreement so that this stuff wouldn't just hit the market in some crazy way. I don't think it'll be good for Bitcoin. That's all I'm saying. So the MicroStrategy stock's up, what, 450%, 400% this year? But winning streaks like this don't last forever, especially when they're built on the framework of a Ponzi scheme. So I guess that's what I have to say about the Ponzi that is MicroStrategy's convertible senior note strategy. There you go. You are all now wiser to his bullshit. So we were always yelling like, this guy's full of crap. This is why he's full of crap. And yeah, Brian, I think you can kind of work that out. That would be bad. But this kind of thing happening 2, 3, 4, 5 years from now, it might not be that bad. And hopefully, I mean, it will be bad, but hopefully you guys have all made money in the process. Now, an ideal setting would be that the price, the net asset value of the Bitcoin rises to the point where it matches the company's valuation. So it's not like a 3-to-1. So it's close to a 1-to-1. That there you could go, okay, I mean, it basically trades like a weird ETF. And you'd be like, okay, it is what it is. The problem is that Michael continues to seek and sell new debt. He continues to debt finance. How's that worked out for the U.S. government? 150, that's unfunded liabilities. 36-ish trillion in debt and not looking like it's going away anytime soon. How's that worked out for any country ever? Like ever. When you debt finance, when that's your product, when all you do is steal money from the future to finance the right now, when has that ever worked out for you or your currency? Don't work, bro. Yeah, let's not don't short a Ponzi scheme either, because these things can go on for a while. And also, do you think Joe Sixpack gives a shit about any of this? No. Nope, and no. So there you go. All right. Let's call it a day. Stay in school. Don't do drugs. Don't do anything my poor installment drunk, strung on a meth grandmother wouldn't do, which is very little. And we'll see you guys back here tomorrow. For those of you interested, obviously, digital investor, we do 5 days a week, 6 days a week if you're a private client, and all sorts of cool stuff coming. Some of it I can talk about. Most of it I won't talk about. But it's gonna be good December. It's gonna be good December. It's gonna be good December for hypercycle people. That's all I'm saying. That's all I'm gonna say. I'm up out.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish. I could